Well, good evening, everyone. This is AJ Monty, Chief Market Strategist for the Market Guys, and welcome to today's Q&A open house session, which is our monthly call that we do with our members. What's really interesting is we are growing each and every month, and we're just putting this out to our members. And so the word is getting out. Obviously, you're finding value here, which is what we intended. And adding that value each and every month will help you, I believe, increase the probability of making money and, of course, reducing the risk, which is how we approach the markets. What I normally do, if you're joining for the first time, what I normally do is I go over the major markets, I look at the indices, I draw lines where I see support, resistance, and such, and then once we get the spin on that, we will then move to your individual stocks. So again, just hold off on submitting any of your stock symbols until we ask for that. Main reason is that the Q&A box, it scrolls. And so if you're putting in a symbol now, by the time we get to the Q&A part, it'll already have scrolled off my screen, and it takes too long for me to go back and look for that. But what we're looking at right now is the spiders. This is the S&P 500 ETF, and you know, we've had an interesting week or so, week and a half of price action. You can see that back here on, what day was that? We had it's August 7th, we had reached a low, and interestingly enough, forgive me there, that's my dog barking at a bear, believe it or not. We do have bears in, oh, hold on, we got bears in Orlando here, believe it or not. And so I got to get rid of that problem. And hold on. Yeah, sorry. There's a black bear right by my office window. Okay, enough of the entertainment. Get back to work here. We have, it looked like a bearish engulfing pattern right there. I'll zoom in a little bit so you can see that. And I don't want to call that a bear trap, no pun intended here with the timing of all that. But this actually is a bearish engulfing pattern on that day. And what happened is that it's a failed bearish engulfing pattern. The reason this bearish engulfing pattern failed, and if anyone who's been following gaps can see this, what happened on that day right here, we actually filled the gap that was left. I could have made that line a little bit higher, but this gap was filled, and when a gap fills, there's an 80% chance that the market will reverse from that point because the target is the gap. So if we're trading up here at around 198 and the target is down at 190.5, the sellers will expect this gap to be reached as what? The target. And it did. So once the target is reached, all the short sellers start covering their short positions and hence the rally. So it was an interesting signal there, but we were on guard because of that gap point. Now, let's continue on with the spiders as I show you the other half of the story. Here, we had another gap. On this day, July 31st, the stock gapped down, forming that target area right there. On Friday, we hit the target area. Now, don't get too bullish right now. I'll show you why. Because we have a resistance point up around 199, which isn't that far for the spiders. So we have resistance up here on dropping volume here. Now that the gap is filled, I would not be surprised to see the market start to drift down. So keep that in mind with the spiders, SPY here, as I look at the rest of the markets, because you're going to see some really incredible similarities here, even as we look at the Russell 2000. Here is the Russell 2000. Now, I left my lines back here. Back here, when we were doing our doing last month's, actually this was 2 months ago, we did the broadcast. I put this out as a expected trend of where I thought the markets were going to go. Now, remember, imagine that there is no price history after this point. What I was looking at the time was a resistance area here that was broken, gapped up, came back, tested as support, and then the markets took off. If you remember from a while back when we were doing this very same call, I talked about the divergence between the moving average and where the price of the market was at the time. And this is where my forecast came in, because I said, well, the divergence here could very well pull the markets back to retest support, and it did. Shortly after that, it broke down below support and the 200-period moving average, and here we are back again filling the gap. So now that I've recapped that, let me remove all lines to clear this for you so you can see what's happening as of today in the Russell 2000. See this gap down? Well, as of today, we filled the gap. We filled that gap. There's still a slight gap up here, but there's major resistance up here. So what does that mean? How do we trade a market that's caught between two gaps? How do we trade a market that's more or less in a trading channel between support and resistance? Well, you have to be very, very careful and not get sucked into any kind of hype that might come as a result of some of the news headlines. And I'll show you as we move on to the NASDAQ. I'll look at the Qs here in a moment. The reason you don't want to get sucked into the bullish hype is because of the Dow. Watch. Now, I left my lines on this one as well, and in order to really show you what we're doing here, I have to back up into the weekly charts. For those of you who were on last month's call, do you remember when I drew my fans? This, I'll even go back even further on the monthly chart so you can see. This is the first trend line that I drew, and then what I did is every time we reached a higher low, I drew the lines to basically highlight the accelerated trends. And what happened was, as of last month, we actually broke down below the most accelerated trend here. Now remember, this is a monthly chart. It's a monthly chart. And last month, we had a bearish engulfing pattern with a very long vertical line called the shadow above the monthly chart. This is why I tell people, be careful not to get sucked into too much of the bull hype, because we still have an intact bearish engulfing pattern on the monthly chart. That's number one. Now, I'm not telling you not to buy anything, because there will be buying opportunities. I'm just telling you that if you buy anything because you're seeing a signal, don't marry the position. Be very ready to get out, move to cash, and protect yourself. Because remember, this is a monthly chart, and you can see as the price was going up, the volumes down here were dropping. And on this bearish engulfing pattern for the monthly chart, we had an accelerated volume. You see the small spike in the red candle at the bottom? That's telling us that there was a real big battle, and sellers came in last month to push the price down. Now, we still have a little time left in this month. And again, I don't want to confuse anybody. I just want you to understand that we broke down below the most accelerated trend on the monthly chart. So what does that mean? We have to watch out for this line right here. This is the second most accelerated trend. And the reason this one is so important is because it intersects with this vertical line. I'm going to hit the pause button here. I don't want to lose anybody because we're putting all the pieces together so I could show you what I'm seeing. This vertical line represents the 7-year cycle. Now, again, I'm recapping this for some who were on last month's call, but these vertical lines represent the peaks that occurred right before the big sell-offs of their time. This was back in 2000. This is the peak of 2007. Right there. This is where we hit the peak. And now, here is the peak of 2014. So we have a very well-defined role reversal here intersecting with the 7-year bear cycle. So let me just get rid of that last one, again, not to confuse or clutter the chart. So we still see a very accelerated upward trend here, but again, looking at the volumes, that doesn't make me very happy when you're looking at the volumes here steadily decreasing, that tells us that there's less and less buyers coming into the markets at that particular point. Now, if I zoom into the weekly chart, same stock symbol, you can get an idea of where we are with regard to the moving averages, the trend lines here, and the role reversals. I'll zoom in one more time onto the daily chart, and you'll see again how the 200 period moving average held as support. But again, now that that gap is filled, we're going to have resistance up high. Keep an eye on the downside at all times. Okay, let's keep going. I want to look at the Qs. That's QQQ. These are the power shares. Now here's a clean chart, a very clean chart. What we have here is really a couple of areas of concern. Right here, we have a role reversal high. That's on the NASDAQ. Remember, the Qs, that's right around 91.5 or so. What is that? 91.30. And we have another level of support here. We have recently broken out of this high, hence the reason why we saw the headlines of NASDAQ breaking into new high territory. But look at the volume for today. We did a high, but it was on lower volume than last Friday. And we gapped up. So watch the gaps now. They're almost easy to overlook. But you have a gap. Let me get rid of the line so I can identify these for you. We now have a gap that was formed today. So this gap is going to act as a magnet to the downside. We have another gap down here, right around 95.60, right around that area there. And we have lower volume today. So you have to keep an eye on the volume. Now look at, again, I'm trying to go over the technical indicators so you can see, again, what I'm seeing. As I look at the trend lines now, let me draw you what I'm seeing and why we still have to remain very cautious. If you look at the former legs of the NASDAQ, you can see that the angles are fairly steep. You see this? See the legs that are formed here? I'm just showing you some of the upward legs. I can even go back a little bit further, and you'll see here from this low to this low and beyond. You see when the market goes up in these stretches of green candles, you can see that for the most part, the angle at which the market rallies is pretty consistent. Yeah, I would have to say out of the past four, the steepest angle was back here in May, but also look at the duration of the upward legs before the market corrects or even goes sideways. Look at the angle of the most recent upward leg. Look, you see it's right up there with some of the steepest angles that we've had before, and you can see that this is the longest upward leg that we've had since even before May, even into the first quarter of this year. So again, another reason to remain very cautious, so that if you're trading any NASDAQ stocks, make sure you're protecting your profits by trailing your stocks up with the price of the stock. And as we go into analyzing your stocks, what I'm going to do is I'm going to show you a technique for manually setting your stops so that you're not second guessing yourself or putting a stop too close to support or anything like that. So we're going to go over some of those ideas. Okay, so we went over the diamonds, the NASDAQ, we went over the spiders, and the Russell 2000. Finally, I want to show you the VIX. For those of you who are not tracking the VIX, I would strongly recommend that you follow the volatility index, because as you can see, these are lines that I drew as price targets. Last month, for those of you who are the option traders, I put this on the VIX as my price target, and a week and a half ago we did come within pennies of hitting that target, and then it pulled back. Okay, so now that I show you what my previous targets were, let me show you what I think the future is going to look like for the VIX. Can anyone, here's a test question for you. How many of you can see a bullish signal on the VIX. And if you see the bullish signal, what are you seeing? Just type something in that tells you. Now remember, there's no volume on this. It's purely price. Can anyone see anything that tells you that the VIX could potentially go higher? Anything that pops out on the chart? Go right ahead. Type that in there. I know we're going to have a little bit of a... Okay. Gil says role reversal. Domingo says engulfing. Nathan says green hammer. I don't see the hammer, Nathan, but I do see Domingo has higher lows. Okay, here's what I'm seeing. Let's see. Okay, Tim says the gap. Fill the gap. Higher lows. Okay, Rick. All right, here's what I'm seeing. All right, I see Stan says the gap at 15.5. That's one of the first things that I see is the gap right here. Now, remember, the VIX is an oscillator. It's not a trending stock. It oscillates based on volatility levels or excitement levels. So there's a gap. And remember that gaps are going to regularly act as magnets. You can look at all the other gaps that have been formed in the past, and you can see how the VIX has filled 100% of the gaps. Again, that's because the VIX is an oscillator. It's not a trending stock. So 100% of the gaps for the VIX have been filled. So if I look at the history and I see 100% of the gaps being filled, what is the chance of this gap being filled? Well, there's some doubt, but there's a very strong possibility that gap is going to fill. So it does mean that there's a chance the VIX could rally up to fill that gap. That's number one. Number two, let's look at what Luis mentioned, and also Domingo mentioned, was the engulfing pattern. Can anyone see that from Friday? This is a bullish engulfing pattern. The big green candle completely engulfing the previous day's red candle. All right, so now we have a gap above the market. We have a bullish engulfing pattern on the technical charts from Friday. And if I go back, watch this, I'm going to go back to a monthly chart. You can see that we are very, very close to the historic lows for the VIX. We're talking historic lows. The historic low right here is right around $10. We're only at $12.32 with some bullish signs. Now remember, this is a monthly chart. Can anyone see any more engulfing patterns on a monthly chart? Absolutely. Look, last month we had a bullish engulfing pattern on the VIX for the monthly chart. And so this tells me that there's a very strong possibility that the VIX is going to go higher. So if I'm using the VIX as a contrarian indicator and I think the VIX is going to go higher, what does that mean for the S&P, which is what the VIX measures? It means lower prices for the S&P. And that's what we have to watch out for. And that's why I think everyone should be putting the VIX on their watch list and keeping good close eye on that. Because you can see that there's some resistance up here around 18. But even if you're trading the VIX, I mean, you could buy the VIX or buy VXX or buy an option on the VIX, and there's enough price move potential here for you to make a lot of money just trading the volatility. And Doug says, yeah, but it may take a couple of months, right or wrong. It could. Anything's possible, Doug. But from the looks of the former gaps, and this is where I go back, if you think, okay, it could take a couple of months, the easy way, let me just get rid of these lines here so I could show you. The easy way to forecast how long it will take to fill the gap is you can go back and look at some of the oldest or longest gaps. See, for instance, back here, you can see that there's a very small gap that was formed when the VIX gapped up on January 23rd. The very next day, it gapped up again. So here are two gaps. And you look at the number of days that it took, it gapped up, went up, and then gapped down. But here, how long did it take? Well, when the gap was formed on April 22nd here, I'm sorry, January 23rd, it only took till February 14th for the gap to fill. So that's a 3-week, roughly a 3-week time frame to fill. And even if you go back here, here's a gap down. This is, again, so you can get your window of how long it might take. This gap formed on October 15th. It eventually filled on January 27th. So that took, 3.5 months to fill there. You see, so you can say, well, it could take anywhere between 3 weeks to 3 months, and you'd be pretty spot on, because based on historic price movement, it could take that long. But I don't think that it will take that long, mainly because of the timeline that I drew on the diamonds. Now again, Doug, weigh this into the equation here. We think that the market could drop based on what we see with the VIX, but what did I say about the diamonds? Okay, this is a 7-year. Let me get rid of that. This is a 7-year cycle that's almost to the week in the cycle, and here we are right at the crossroads. So September and October are the most notorious months of the year. Historically, we generally see the market selling off in when quarterly earnings come out. People tend to get spooked. You heard the old saying of selling the markets in September, and then you get into the end of year rallies and things like that. But this timeline also has me on guard. So if the VIX has a gap above the market and the Dow is reaching this timeline of a 7-year cycle bear market, then all bets are off for any aggressive long positions. Okay, I took a little bit longer in going over the market snapshot there, but I think it's important because there's so much news that you don't want to get caught in that hype like I was talking about before. So why don't we do this? Let's take some questions first, okay? Anyone have questions, or you want to just get right into the stocks? Okay, let's see. Rick says BWP, I don't have a position currently, but considering with a large gap. Let's look at BWP for Rick. Okay, BWP. Now, this is a 20-year, Rick, keep in mind, this is a 20-year monthly chart, okay? I'm starting off there only because that's what I have my chart set on. Now, let's all together, whether you have this stock or not, let's scan the price history and look. What I'm looking for are a few things. I'm looking for support. I'm looking for resistance, obviously, is what my eye generally gravitates to. But I also try to find different cycles, if you will, or legs where the market has gone up. And you can see that we have 1, 2, 3, 4, 5. We have 6 consecutive months of green candles. But if you look at the volume is dropping. Okay? So, Rick, here's what we have to analyze here. Number one, when the price is going up as aggressively as it is here, remember, this is an aggressive upward angle that we're seeing here. Again, even more aggressive than some of the other legs that we saw back here. This was fairly aggressive back here. You can see this stretch is pretty aggressive. And you can see back here we had a very aggressive upward leg here. But look back at these aggressive upward angles and just look at the number of consecutive green months we've had in the past before seeing a red month. Now back here we had 3, 6, 7, 8. We had 8 consecutive green candles. Now we have 6. But the volume dropping the way it is tells me watch out, because the market is approaching a role reversal resistance area right here. Okay, so now remember, this is the monthly chart, Rick. I'm analyzing this on the monthly chart. Now let's zoom in. This is what I call 3D charting. I'm zooming into a more or a shorter interval on the charts. And you can see that the stock has this gap. So right around the $23.5 to $24 level would be a price target to fill the gap. And then once the gap fills, watch out below. This thing could be heading lower. So what do you do in the meantime? Well, this is a real tough one because a lot of times the gap, especially large gaps like this, they don't have to fill all the way. In fact, most of the time what I see, usually with stocks that gap down, is I generally see a retracement that's about 50% of the move. So let me show you what I'm talking about, 50% retracement. Let's go from this high to this low. Boom. Where's the 50% level of this whole retracement? Right here, right around 2180. So there's a good chance they could rally up to 2180 to reach the 50% retracement level, but then this thing could start taking another nosedive. So Rick, I don't know why you're drawn to this one if it's just for the gap, but this one is a high-risk trade because you got so much going on there with that large gap and the long stretch of green candles on lower volume on the monthly chart that you have to really, really be careful with this one. I think there are many more stocks, other stocks that you can look at that are gapping or have gap that you can look at. In fact, if you're an equity trader, we were looking at TWX as a gap trade because on the daily chart, you can see here, we put out a buy recommendation back here, and you can see now the stock has rallied up because my target was up here. But again, this is one of those big moves here. I'm actually on the verge of getting our members maybe to take a profit or turn that TWX position into some kind of a spread trade, because if you look at the retracements on this one, if I go from this high to this low, boom, right here, we're very, very, actually, hold on, I did that wrong. I have to take it from the other high, take it from this high to this low. You're very, very close to 79.42, which would be the 50% retracement of this downward move. You see? So TWX is a very, very interesting stock, and you can see that this too has a history of gapping. Look at this, it gapped up, boom. Shortly after that, you know, the merger did not go through. It gapped down on the bad news. Now it's trying to recover. And so this, I think, right around the 80 to 82 level is a fair value for there. So you can trade gaps, but you have to be very, very sensitive to retracement levels as well. Okay, I'm going to try to go through some rapid fire analysis here. Paul says, thinking of a put on CAR. Let's look at CAR here. CAR. Thank you for that suggestion, Paul. Okay, now at first glance, I am very much in line with what Paul is talking about for CAR. Now, if you're not an option trader, a put position is a bearish strategy. It's when you actually make money when the stock goes down. Now, again, looking at the angle of this trend, oh, let me get rid of that's my Fibonacci numbers. Can't have those. I got to get a trend line here. I'm going to remove those drawings, go back up. I don't know how many of you have this charting platform. It's pretty good. I like it. It's a Thinkorswim platform, by the way. And look at the angle of this one. Holy mackerel! And you have 1, 2, 3, 4, 5, 6, 7, 8 consecutive days. I'm not even counting that as a green. You probably could, but you have 8 consecutive days of upward, almost vertical movement on decreasing volume here. So, Paul, I would agree on your idea to buy a put, but I would have to say it's best to wait for the red candle to show up first, because once the red candle shows up, it could very well be a bearish engulfing pattern. It could be a spinning top. It could be a doji that's red. This stock does have a tendency to react on bearish engulfing patterns. Here's one here. Here's another one back here. Here's one back here. So it might be best for you to wait for the red candle, or if you still want to get in early, I would only buy half of the position on a green because the volume is being exhausted, and then when you see the red candle, buy the other half. If that makes sense, I hope so. that's cost averaging into a put position. Now, Paul, before I let you go on this one, look at the weekly chart on this. You see this? This, again, it's only Monday, so it's hard to say what the volume is going to be like, because last week you had a very strong volume candle that did not have any shadows. And what I mean by that, there are no vertical lines above this candle, which tells us that the buyers were ending last week were very strong. That's another reason why I think it might be best to wait for the red candle on the daily chart, because if you see a red candle on the daily chart, that will really suck up all the volume on the weekly chart, and it might even form a little bit of a doji back here on the weekly chart, which would get people more inclined to selling out of the position and taking a profit. Okay, so Paul, hopefully that helps you. All right, Ron says he doesn't own it, but he wants to know what a good entry point would be on HTGC. Let's look at that, HTGC. All right. Okay, Ron, first glance, remember we're looking at a weekly chart. I'm seeing what looks to be a possible double top here. That's number one. Again, it's on a weekly chart, so I have to really zoom in now to see what the daily chart looks like. The good news for you is that it's bouncing off the 200 period moving average. That's good news. The second part of the good news for you is it looks like it's also bouncing off of what might be a role reversal support level. Resistance, resistance once broken, looks like it's holding as support. The only downside, Ron, is that the stock gapped down on last Thursday. It gapped down. And it's starting to make a comeback. And let's leave this answer up to the audience now. I'm going to ask the audience a question, and let's see what we come up with. If the gap fills right here, which is it's very close to filling. In fact, it might have filled today. Here's how we figure it out. The low from this day was, let's see, the low was 1596. So today's high has to be higher than 1595 or 96. It has to be at least 1596. What's today's high? Today's high is 1595. So we're actually a penny away from that gap actually filling all the way, but that's close enough, I think. So when gaps fill, if the gap's down and then the stock goes up to fill the gap, what is the probability of the stock reversing from that point? Is there a high probability or low probability? What does the audience think? Let's see. It's a high probability. Tim, Jeff, you're right. Domingo, Gil, Robert, you're all right. There's a high probability that the stock can reverse after that gap is filled. So you have to be really careful with that one because Ron, if you buy into this and it's going down, you're going to have to keep a very, very tight stop. So what would you do? If you buy into this and you still think you want to buy because it's going higher, you would have to put your stop somewhere below the 200 period moving average. I would say give it maybe I would say a 50 cent risk per share. So for instance, if you buy it at 1584, put a stop at 1534. So it would be somewhere down here. Give it 50 cents. That way, if the stock breaks down below the 200 period moving average, you're still under that support level, and that way you could still minimize the risk. So hopefully that helps you out, Ron. Okay, Gil says Apple got the September calls at 100, considering a SEP October diagonal spread. Well, for those who are not option traders, just bear with me here as I help Gil. Let's go to Apple. Gil, just so you know, calendar spreads don't usually work well when you're buying a shorter term option. So be really, really careful with that one. If you're going to do a diagonal spread, you need to go out into January 2014. If you're buying any option that's expiring soon, you could be in trouble there. So if you already own the September 100 calls, chances are you are making money. And if you're making money, look what's happening. Now, Gil, let me try to help you out here. All right, Apple, you're long the September 100. Can see rolling to. All right, Gil, tell me, number one, what price did you pay for the September 100 calls? Because those are out of the money. If you're long those, I'm just telling, my gut instinct is telling me get out, get out. But tell me, what price did you pay? Okay, you have to check, but okay, but I'm up more than 20%. All right, Gil, that's enough information for me. I'm telling you right now, you bought an out-of-the-money option that's expiring next month. Those are all the options that I would sell. So if you're up 20% on that, I would immediately take a profit on this one because there's a gap below the market. The divergence between the moving average and the stock is quite wide. You see that? This stock does not like to stay that far away from the 200-period moving average. And you're right at a resistance point right there. So tomorrow, if you have a red candle, that means the sellers are coming in to sell at resistance. And if it's lower volume, it tells you that the buyers are drying up. So I would immediately take that profit and run, and I wouldn't even look back. That's just the way. That's the way I would look at it. Okay, so I like to ask that you all retype your stock symbols because I scroll down and those other ones are now off my screen. I see Heina, is it? Just buy stock, no option, don't know how. Okay, Heina, I would go to the Market Guys webpage, or what you can do is buy the book. It's on Amazon, The 5 Points for Trading Success by the Market Guys, and chapters 9 and 10 will explain basic option theory to you. I do not recommend you trading options without having any kind of knowledge whatsoever. So if you're only buying and selling stocks right now, I would take some time to learn about options and not trade them until you have a basic understanding. Then we also have a trade alert service on options that's very educational. You could subscribe to that. It's a cheap way to get an option education. And again, tune into these web seminars and open house sessions because it'll help you. So in other words, what happened here with Gil bought an out-of-the-money, fairly expensive option on Apple, and he's up 20% on that option trade. And you can see that even since the low here in August, the stock has not gone up 20%. So if you were buying the stock even on this hammer pattern at 94 and you're selling it at 99, you're only up a little over 5%. And that's the great thing about options, that once you learn how to use them, you can make 20% on a $5 percentage move on the stock because it's a leveraged contract. So hopefully that'll help you. Okay. So Dean has, oh, thank you, Dean. Dean rather, is looking at QBX. Let's see what that one is. QBX. Long at 30. Oh, is this? Oh, GBX. Excuse me. GBX. Let's see. Okay. You're long this at $30.60. Congratulations. Great, great position. And Dean has a question. Stay with it? Question mark. Well, I would say yes. However, you absolutely need to protect this position. And let's go over this step by step. Number one, if you're long the stock, you only would want to sell out when you see a bearish condition or a breakdown of a major support level. Okay, that's the two things you would want to look for. Today, this stock did not show any negative signs. In fact, it showed just the opposite. A very strong green candle that looks to me, let me go up here, let me draw my price level. It looks to me that it's closed slightly above this resistance area. on, look at the volume, on higher volume. Now, that's the positive, so I would stick with the position. However, what's the negative, or the other side of the coin? Today, the stock gapped up. You see this? It gapped up. So what you have to watch for here is if tomorrow the stock goes higher, but the volume goes lower, you need to move your stop up. Now, I don't know where your stop is. Maybe you could tell me and I'll help you with that. But at the very least, you want your stop down around 65 or below. If the stock goes up and the volume drops, then what you're going to do is you're going to move your stop from here to just below the new breakout point. Why? Because, and again, I'm going to go back, because I have to move this scale down because it's, so I have to scale this down because what's happening here is we're almost off the charts on the stock. Okay. So here's why. When a stock breaks out of resistance, we generally look for a run-up or what's called a breakout. And then what we expect to happen is we expect the stock to pull back to the original breakout point and bounce. And this is called the role reversal. So look at that for a second and let that sink in there. By the way, folks, if you're new to the market, guys, we have a video library that explains this concept of the role reversal. So it's only a very short video. I think it's 4 minutes long. You go ahead and look at that. So if you look back at the past, here's another area. See, we had a breakout of this resistance point. It went up, it pulled back. Here's another area of resistance. It broke out, it pulled back. You see, so we have these what look like zigzags. So we are expecting this stock to run up because we have a green candle. It closed over resistance on higher volume. So again, to reiterate this, if you have a profit, especially such a big profit that you have, you want to protect that. All right, now let's look at the weekly chart because you all need to get in the habit of looking at weekly charts. Look at this incredible upward move. This is a weekly chart. What do we see? Watch. It's very similar to what we saw in the in the Dow, accelerating trend. See, I'm taking this low, connecting it to this low, projecting out, connecting it to this low and boom, I extend that. See? Now, I take this low. This is called the fan. This is called fanning. And you all need to get in the habit of creating these fans if you see stocks that are accelerating like this. Watch. Because now we take this low, connect it to this low, and project out to connect as many of the lows that we can. See? There we go. Now let's do one more. One more. Let's connect this low. You see how I'm doing this? I'm going from here to here to here. Then I accelerate the trend, and now I'm going to do it again here. Connect this low to this low. See that? There's your fan. Now, this is why you have to protect the position, because you have 3 legs in this fan which have accelerated the trend on the weekly chart. So, if you want to protect this position, you want to protect it on a breakdown below that line. Now, when I go back to my daily chart, that line will hold. And you can see that there it is. You want to start protecting yourself below these levels. So again, a safe place to put your stop is, I would say, probably, I don't know, let's see. I would say right below the gap. There's a small little gap there. I would say raise your stop to around 64.5 and then leave it. Okay, now repetition is really the best teacher. So let's use the same concept and apply it to other stocks. Now, Luis de la Cruz says he has a position in TSLA. He has an option position. Now, Luis, I don't see whether or not you own calls or puts. So if you could help me out with that as I pull up your stock, TSLA. Tesla is an incredible stock. They're doing great work in the area of electric technology and cars and motors and such. And again, if I go back and look, I'm going to erase all my lines. I'm going to go to a weekly chart so you can see what this looks like on a weekly chart. And again, we have an accelerated trend. Watch. Boom, boom. You see how I'm doing this? And I'm connecting as many of these lows. Now again, if you've never drawn a trend line, watch what I'm doing and try to duplicate this and go out and get some other charts. I'm starting in an obvious low point, and before I even project my line, my mind and my mind's eye is starting to, hey, how many of these lows can I connect before I can get something that looks like it's where the stock is bouncing off. So here is my first trend line. Now, if I want to extend and accelerate my trend line, can anyone tell me where I should start my second trend line? Who wants to answer that question? Okay, and Lewis, you said you have the calls. Okay, so that'll help me. So who wants to help me? Where should I start my next trend line if I'm drawing a fan? Tim says 180. Who would agree with that? Okay, Jeff says 180. Oh, beautiful. John says 180. Brenda says 180. Look at that. Are you all on the phone together doing some kind of conference call? Everyone, Gloria, Ken, Gil, Bill, everyone's saying 180. That's exactly where I'm going to start. So now I'm going to start here, and I'm going to connect some more. Okay? Now, here we go again. Now that I've drawn my secondary accelerated trend level, I'll zoom in for you, where should my next line start? Who wants to help me there? Now, let's go. Nathan says, okay, Nathan, I think you're right. Who else? Tim, you're right. Ken, you're right. David, Tim, okay, beautiful. Jeff, very close, 220 to 223, right there. I'm going to start right on that low. Boom. Now what am I going to do? I'm going to project and connect. Now, see, folks, it's kind of like, okay, we're taking off in an airplane, and here is my very healthy angle of climb. Now, if there's any pilots out there, you know exactly what I'm talking about. If I'm in a plane and I'm climbing at this rate, now again, I'm highlighting the longer trend line. This is a healthy rate of climb. Now, if I don't give the stock any more if I don't give the plane any more power, but I pull the nose up, and remember, I'm not giving it any more power, what's going to happen to the plane as I continue to go up with the attitude of the plane? Remember, I'm not giving it any more power. What's going to happen to the plane? It's probably going to stall. David, I take it you're a pilot. That's exactly what's going to happen. So what indicator on the chart is going to give me an idea of how much power is in this plane that's going almost vertical? The volume. See, so if the volume is not going up as the attitude of the plane is going up, or the angle of the trend is going up, there is a great chance that this is going to stall. Okay? So going back to your question, Lewis, if you have calls, I'm guessing that you are in a profitable position right now. So I would take my profits and run for a couple of reasons. The angle is going up while the volume is going down. You're also reaching a ceiling or an area of resistance. See that? So if you have a profit, boom, take the profits, run. And remember, this is recorded. I would really love it for each and every one of you, whether you're an option trader or not, I would love it if each and every one of you track the progress moving forward here with Tesla, TSLA. In fact, I would even be inclined to look at puts on this one. I would seriously consider buying puts on this one, because if you look again, one last thing is this stock does not like to stay that far away from the 200 period moving average. Look what happens when the stock pulls far away from it, and look at how far the stock is from that moving average. It's pretty far away. So the rubber band is getting stretched here, and it wants to snap back. Oh, I just saw another signal. Okay, can anyone see a sell signal there? What's that called? Don't want to give it away too much. Who sees the sell signal? Not a falling star. David has it right. Lewis, you have it right. John, you have it absolutely right. And Gil, you're right. We have spinning tops here, but we have a bearish engulfing pattern today with a long shadow above the candle. When you have a long shadow above the candle, it means the buyers tried to move it up today, but the sellers pushed it down by the close. And it's a bearish engulfing pattern. So it went here, and it came all the way down to the lows. Look at the intraday chart. In the morning, it tried to rally. I could tell that's just by looking at this candle. In the morning, it tried to rally, but by the end of the day, closed on the lows. Look at that. See, in the morning, it rallied, and throughout the day, it sold off. Oh, look at this. This is after hour trading right here. The gray area is after hours. So, Lewis, I would get out as quickly as you can tomorrow. That bearish engulfing pattern will probably hold fast, and it'll start to pull back. Okay. Hopefully you're getting the signals here. Again, retype your symbols. We got a lot of questions and answers there. Retype your symbols, and I'm going to go to the next one. Okay, Bruce, breakdown in SLV. Let's see. SLV, I love silver, by the way. Is there a breakdown? No, on the contrary, there isn't a breakdown in silver. We have a gap fill here, and we have green candles coming in with a spinning top as of yesterday. Now you have to. This is actually an engulfing pattern, but it's not a textbook bullish engulfing pattern. We have a gap above the market here. You see that? That's going to draw the price up. We have a gap above the market here. Again, it'll act as a magnet to go higher. Silver does not like to stay that far below the 200-period moving average, so we'll have a draw back up to the moving average. And we have a drop in volume. Interesting. Why would that be bullish? Why would a drop in volume be bullish? Well, because when the price of the stock is dropping and then you have a drop in volume, it tells us the sellers are pulling back from their selling activity. So if the sellers are stopping their selling, that's bullish. So I like SLV here. I like it a lot. The other reason, Bruce, I will tell you I have a very large position in silver, so I don't want that to be the bias that everyone is accusing me of. But I will tell you that it costs anywhere between $17 and $19 an ounce to pull silver out of the ground. So if we're buying it at mining costs, that's great, because as the mines, see what happens is when silver starts breaking down at prices below what it costs the mining companies to pull it out of the ground, they will cut back on production because they can't make any money. There's no profit margin there. So if they cut back on production, what does that mean for supply? Well, if there's less production, it means there's less supply. Less supply means more demand eventually. So the miners will actually create their own demand if it stays down below. It's kind of like the oil drillers back in the heyday when oil was crazy, price per barrel. The oil drillers were going crazy, but when oil prices dropped, the oil drillers closed the pumps because it was costing them more to pull it out of the ground than it was for them to be able to sell it. So it didn't make sense. Okay. All right. Let's see. Mihat, I hope I'm pronouncing your name correctly. You're looking at MAN. All right. MAN. Manpower. Okay. Immediately, my instinct is telling me to buy this. Again, there are certain buying opportunities out there. You just have to be cautious with this one. I don't know if you have a position in this, but I would like to know if you do. That way I could tell you where to put your stop. So go ahead, put that in there. If you have a position, okay, you are long. Would you be able to tell me what price you're long at? That would be great. I could even go so far and ask you what day did you get in. That way I can see whether or not you bought it on a buy signal or not. But I won't put you on the spot that okay, you got in today. Oh, beautiful. Okay, you got in on a green candle. Nice. Okay, the other thing is you got in on a green candle on higher volume. See, price is going up now, and the volume is going up. That's bullish. Remember, if the price is going up and the volume is going up, it's bullish. If the price were going up, but the volume is going down, that would be bearish. So you did a good thing. Okay, now I'm going to put you on the spot. Where is your stop? And if you say you don't have one, I'm going to call you up and scold you. Just kidding. But you really need to put a stop in. Where is your stop? Do you have one? Okay, you're not answering. I don't want. Oh, you got to stop. Beautiful. 73.5. All right. Either you read the Market Guy's 5 points for trading success, or you're just a natural good trader. Okay. So you bought here. You have your stop here. I like that already because you could say, if I go back here, watch what I'm going to do. I'm going to draw a role reversal line. All right, well, hey, let's have some more fun with the audience. Can anyone tell me where I can draw a role reversal line on this stock? A role reversal. Can anyone see what price level I might draw that from? This is a little bit tougher because this stock kind of flirts with the line. It's not exact, but okay. Ralph says, oh, I like that one. Okay. Ralph says that. Amelia, okay. David, you're all very, very close. Jeff, Doug, John, Lloyd. Yeah, okay, here's where I would draw. You see this? You see this area back here? There's a slight resistance area. I'm going to draw it right there. Right there. Now, this might draw some of the engineers crazy because they're going to say, well, AJ, it's not exact. It didn't bounce off of that support level exactly. Well, role reversal is not an exact pinpointed horizontal line. It's a general area. So if I see a general area of resistance, I could have even gone back here and said, okay, you know, let's draw the role reversal back here from those highs. General area. I'm trying to connect as many of these common areas as possible because resistance, once broken, turns to support. And we can see that this acted like a good area of support. And lo and behold, that's where we are right now. So if you buy here, you should be putting your stop somewhere below support. And as we saw, he put his stop, where was that, man? You put it at 73.5, I think you said. So that's right around here. So that's good. So you put your stop here. If it goes down below and breaks down, boom, it's most likely going to go lower because it's down below the 200-period moving average. Okay, last question. What price have you set as your target level or your get-out point? Where is that? Again, Medhut, excuse me, My Hut. Okay, what price did you put your target, or what price are you going to get out once the target? Okay. 80 is the first target. All right, beautiful. I would say right around that role reversal resistance, because here's support. We see it bounced up a little bit. And the reason I think 80 is a good target is because this 200-period moving average is going to continue to slightly go lower because the stock is below that. So most likely 80 is going to be the point at which the role reversal line intersects with the 200-period moving average. And that would not be a bad percentage of return if you got out at 80. If it breaks out, and here's where I can help you, if the stock all of a sudden does this and it breaks out over resistance here, you're most likely going to expect this to happen. So if it breaks out, what you want to do is you want to get out of this stop. You want to move that up to here. Okay? That's what you want to do if it breaks out. So if you see a green candle here and it's right at resistance, do not sell. Do not sell. If you see a green candle here and it starts accelerating the volume, you might even add to the position. I know that would be tough, but you might want to do that. Okay? You might want to add to the position and then continue to move your stop up. Okay, I think I have time for one more. All right. Bruce, here we go. Oh, that's not a question. All right, let's see. Gil, MAN related, general related question. Is it usually okay to buy under the 200 moving average period? It's okay, Gil. as long as the stock is stretching away from the moving average. Again, that rubber band effect that I talk about most often is if the stock is moving well below the 200-period moving average and you're starting to see a pivot point higher, then just like what we're talking about here, the 200-period moving average would be your target price. Okay, Jeff, last one, ANAC. ANAC. You're long this one at 3. Whoa! Sell it. I'm not kidding. If you own this at 3, the reason I say sell it is because it's hit this resistance point, and I see the volume dropping. Can you see the volume dropping here? See this? So you see the volume dropping on the way up, and you're starting to see these red candles at resistance. And the other reason I say sell it and take your profit is because the stock has moved so far above that moving average that it's most likely going to pull back. Now, when I say sell it, it doesn't mean sell it forever. Okay? This stock could very well give you another chance to get back in. So what I would do is I would sell it and then look for another entry point because it's still above the 200-period moving average. So if you sell it at 20, I would look to maybe buy it on a bounce at 18.5 or 18.70. If it does this, pulls back, and then all of a sudden it bounces off this moving average, this role reversal, buy it, then put your stop down here. That's how you would trade that one. So hopefully that's helped you. I'm shaking my head right now. We've had a lot happen. I've almost had a bear attack come through my office window. We had good connection on the internet. That's great. But I'm totally amazed at how quickly that hour went. I want to let you know that I will be putting out another trade alert midweek. At the very latest Thursday, because I'm starting to see some signals here that are leading me to believe we should start moving into some bearish positions. I want to get a little bit more aggressive on positions to the downside. Tesla is a very good possibility. We might be talking about that more. But if you want to bring up more questions, please write them down, save them for the next Q&A open house, and stay very close to the Market Guys website. We are putting together some more videos right now. Bill Shanley, who's recording this right now, is going to post this to our member page so you can get this in review. If you're not a member of the Oracles, very easy to subscribe. Just go to the Market Guys website. It's a month-to-month service. You can cancel at any time. There's no long-term binding agreements or anything like that. We're having a great time in these markets, and we hope all of you are having the same amount of fun. So I'm going to sign off for now. Have a great evening, and we'll talk to you soon. So long.